Welcome back to the Keiser Report. I'm Max Keiser. Time now to go to Egon von Greyerz of goldswitzerland.com. And I can tell right away, Egon, that you're actually in Switzerland. The Matterhorn is right behind you. How brilliant is that?
It's a magical mountain, you know, and I've had a place here for a long time. And it's the perfect place for lockdown too. Of course, you know, the company name is really Matterhorn Asset Management. Our URL is Gold Switzerland. So Matterhorn Asset Management, this is what we're seeing, as you said, behind us, Matterhorn. So, yeah, a great mountain.
Super. Well, let's get into some of what's happening out here. You tweeted recently, quote, "There can't be any clearer sign that price discovery is impossible in this totally fake paper gold market. Whilst fake paper gold is traded at $70 trillion a year, annual mine production is a mere 213 billion. Speak on that a little bit, Egon.
The gold market, the gross volume on in London, really, between the LBMA banks, is greater than the S&P volume. And, you know, this is for a very small market, where the investment market is, as you know, only 0.5% of world financial assets are actually invested into gold. So you then have to ask, why is the market traded in these volumes? Well, my view is, and I'm not the only one, that this is constant manipulation and intervention and support by the BIS and the bullion banks. I mean, the BIS BIS is the Bank of International Settlement in Basel, which is the central bank of all central banks. And of course, they have total immunity against any prosecution. I mean, they have a better position than diplomats. So basically, they interfere and intervene in the gold market. And in my view, that is because central banks don't have the gold that they say they have. And if a big part of that has been leased to the market, and the BIS and the bullion banks have to constantly trade and especially with swaps, this market to pretend that there is still gold around, and that the central banks have the gold. But you know, central banks lend or lease their gold to the market, and in the old days, the gold stayed in London, and therefore it was. There was no problem because that's where most central banks keep their gold, and that's where the biggest LBMA holdings are also, including the GLD ETF gold. But now, in the last 10 years or more, the buyers have been, of course, India as tradition, and also now China in the last 10 to 15 years. And of course, so before the gold was lent from the bullion banks, or from the central banks to the bullion banks and kept in London, but now China gets the delivery and has done for the last 10 plus years. And therefore that gold that belongs to central banks, leased gold, has now gone to China, and they'll never come back. So all the central banks have is an IOU from the bullion banks, and the bullion banks can never deliver this. So in my view, all of this massive trading activity is to basically disguise this fact that there isn't enough physical gold around.
The manipulation of the gold price ends up sending out a price signal, and that price signal gets picked up by the financial media, and it becomes a consensus that the price of gold reflects a certain absence of inflation, and this justifies lower interest rates, which then get cycled back into gains for banks who are perpetuating a massive fraud in the bond market. That is to say that the central banks are buying not only fake gold, but fake bonds. You know, these bonds are printed into existence and hiding the fact that there is an enormous bond bubble. The bond bubble is the most manipulated market in the world. Now, my question is that we understand that the gold prices doesn't reflect supply and demand. That is completely manipulated. But I don't think we're going to find any resolution in the gold price conundrum until we sort out the bigger bubble, that is the central banks and the bond market. And so will we get any relief on that front? What will it take for markets in the bond markets to be that bubble to be popped? How are we going to pop that bubble, Egon? Because we'll never see gold trade at the accurate price until the bond bubble is burst. Well, how are we going to burst that bubble, Egon?
No, I agree with you on the bond market. That is the biggest bubble in the world by far, and that bubble is going to burst. There's no question about it. It doesn't make sense that you have maximum borrowing and minimum rates, or even negative rates. There's nothing to do with supply and demand, only with manipulation. Well, I think that the debt markets will default. I think central banks at some point, and we are now seeing the most wonderful dream team here, which I call Biden, Yellen, the real dream team who are now going to accelerate the money printing, which you would have thought was impossible because it's gone exponentially already now. I mean, Obama created as much money during his 8 years as the whole of the United States did for 200 years when it came to debt, U.S. debt. So I think that central banks will, at some point, when there will be debt defaults. Because the coronavirus was the most perfect catalyst for this final phase of money printing, but it will also involve major debt defaults, and those defaults will eventually lead to interest rates going up, and central banks will lose control of the bond market. The stock market collapse is serious, and that will come in this year. I think it'll come in the next few months. But the big one, whether that takes a bit longer, that might take between a year or two, the bond market, in my view. But when that collapses, that's the end of the financial system, and that will happen. The gold market, yes, will it take? I think it will go up before then. If stocks go down properly in the next few months, which I think they will, then gold might go down a little bit initially in sympathy, like it normally does. But then I see the final or the next wave up in the gold market, and so we will see gold going up. But it will only go wild when, as you say, bond markets collapse. That's absolutely true. But I don't mind if it doesn't go wild. If it's continuous, we've been into gold for 20 years, into physical gold. It's been since $300. And it's been a nice uptrend, and that will continue. But it's never a straight line, as you know, as you see with Bitcoin. I mean, there are big corrections in gold, and not quite as big as in Bitcoin, but there are always corrections, and there is manipulation. We saw only a couple of weeks ago, gold price dropped $75, 9 in the morning, within a few seconds, 1.4 million ounces were sold. Typical manipulation. No trader in the world who wants to keep his job would sell 1.4 million without the buy being there and making the price drop $75. So that short term, the market is manipulated. Long term, supply and demand will prevail, and all of these massive amounts of futures gold that will not ever get physical delivered. That will just implode. COMEX will implode. LBMA banks will either not survive or just have so much money printed by central banks that they're not going to be worth anything. No, that's going to happen. We're going the finale to this era, central bank era, the last 100 years. The finale will be spectacular, and it will end sadly in tears. Sure, it's good to have gold. It's good to have, in your case, also have Bitcoin, and for many investors. Will that protect us? I think it will. Certainly gold. I don't understand enough about Bitcoin, so I can't say how that will protect us. Gold will continue to be money and wealth preservation, in my view, for the foreseeable future, as it has been for 5,000 years. But, we will have other problems to worry about if I'm right in my forecast.
So this market manipulation that's going on, principally driven by a corrupt Federal Reserve banking system globally, is being called out by some corporate CEOs like Michael Saylor over at MicroStrategy. He's put billions of dollars into Bitcoin, and he's openly calling to essentially crash the system that's corrupt, and by buying Bitcoin, because Bitcoin, unlike gold, unlike the bond market, seems to be immune from these types of manipulations by the central banks, the bullion banks, and the Wall Street banks. If Bitcoin were to get to that $4 to $8 trillion market valuation, it's currently at about a $600 billion market valuation, would that be the pin that pops this bubble, and then we'd see some some great price discovery in gold. This is the point I try to make to people like Peter Schiff, who's a Bitcoin basher. I try to tell him that Bitcoin should be his friend because it could pop the bond bubble and open the way for actual price discovery in gold.
As I said, I'm not an expert on Bitcoin, so I wouldn't, I don't link them directly because they move totally differently. And I don't know, I doubt that the Bitcoin will pull gold up. But if it goes to those values, Bitcoin, then I think central banks will be in there long before that to start to say, we don't like Bitcoin, it's getting too big for comfort for us. And there's a risk that they will ban Bitcoin, in my view, because they're not Bitcoin, you know, they hold no Bitcoin and they probably won't hold any Bitcoin, and they will, if there's going to be a digital currency, it'll be the central bank to digital currencies and not Bitcoin. So, but as I said, I'm not an authority on Bitcoin. I stick to my gold. I see gold continue as long-term uptrend, and I see that happening now soon anyway. Even if it corrects short-term, it will. The long-term trend is strongly up, and we're going to see good moves in the next few months, in my view. But again, you know, we're measuring all of this in paper money. You know, remember, it's no use Bitcoin, gold. We're measuring it in paper money. That means nothing because what's the value of paper money at the time we measure it? That's what we're going to look at.
The IMF is calling for a new Bretton Woods. So what does that mean?
Well, it means another round of manipulation of currencies and the financial markets, and they might try to temporarily fool the market by creating new digital currencies and then push the debt aside into, you know, well, that's the old debt, it doesn't count. It's not going to work. If it works, it works for a very short while. The whatever reset that is done officially, in my view, will fail. And the real reset will be an uncontrolled and uncontrollable reset that is going to be very nasty for the world.
All right, my favorite gnome of Switzerland, Egon von Greyerz, thank you so much for being on Keiser Report.
Always good to see you, Max. Glad to talk to you. Thanks very much.
All right, and that's going to do it for this edition of Keiser Report with me, Max Keiser, and Stacey Herbert. I want to thank our guest, Egon von Greyerz of goldswitzerland.com is where you can find him. Until next time, bye, y'all.